What's going on, fellow investors? We finally have this lovely year of 2020 coming to a close, and what better way to close it than have a very rare video where we're recording on my MacBook rather than on my phone. So I hope everyone had a great Christmas and will have a fun and safe New Year's. Now let's leave the C19 garbage in 2020 and continue this prosperity into 2021. So today I will be showing you guys all of the dividends that I received for the year, but more importantly, it's going to be displayed in a way that it really highlights the progression of the dividend growth. And it's really nice to see companies be paying us, but it's even better to see that companies that are consistently giving us larger payments year after year. So I've been in the market now for 3 years, and the growth, it just continues to amaze me because it's just so passive, and the companies do all the growing and compounding for me. For each of you that continue to watch these videos, I just want to thank you for all of the support. I literally make pennies off each of these videos, and I put in a lot of hours to do the editing, the research. That all takes so many hours to do, but interacting with all of you in the comments and seeing the feedback on the videos, that's what makes it all worthwhile. And the channel has grown by nearly 600 subscribers this year. I certainly wish it was a little bit more, but hey, nothing worth having in this life comes easy. But that just means I have to work even harder in 2021. I have to put out even better content, and hopefully we can reach 3,000 subscribers a year from now. So please everyone, just keep doing your part and hitting that like button and subscribing if you're new here, and let's dive right into it. So you can see the agenda here. We're first going to be talking about the November dividends and then the December dividends. I feel like I'd be cheating you guys if I didn't get to go over those with you. I always go 1 month in the rear, so I didn't have time here to go over November and December. I thought it would just be easier to combine it into one video. And then we're going to actually take a closer look at the actual year-over-year progression of each company's dividends, and you definitely don't want to miss that part. It really is the dividend snowball metaphor, where every year that snowball just continues to get packed and packed with more and more dividends and becomes more and more powerful, and that way we're able to achieve our financial independence goals even sooner. Just real quick, wanted to highlight, each of the milestones I've reached, and at the end of 2019, my portfolio was only $18,772, and just a year later, as we're closing out 2020, my portfolio will probably reach $66,000 by the end of this year. So, I definitely, not even in my wildest dreams, could have thought the portfolio would grow as much as it did in 2020, let alone with everything that 2020 has thrown at us with this, pandemic and all, stocks plummeting and then reaching all-time highs, and then so many businesses not even able to operate. Just totally unimaginable things can happen, and who knows what's in store for 2021. So as you guys know, November was actually the first month where all my dividends were paid out on Fidelity rather than on Robinhood. So after I made that transition, all the dividends are going to be showing up on Fidelity. So while Fidelity is a great brokerage, and most importantly, it feels safe and secure, I don't have to worry about my money mysteriously being hacked and then not having a customer support number to be able to call. The visuals of the dividends received is just not as appealing as Robinhood's. So I'll have to change the format of that going forward. But for now, I'll just share it here on my Google spreadsheets. So we can start here with AT&T. So AT&T, ridiculous dividend yield. In the month of November, they paid me $7.80. And then over here on the right-hand side is the count. That just means how many dividends have been paid, lifetime to date. So AT&T was the 428th dividend that I've ever received. All right, so moving on here, we have General Mills. So I actually just ate some Reese's Puffs. Those are a General Mills branded cereal. For once, I'm supporting them. And they paid out $2.04. Then we got Verizon at $3.77. So Verizon is actually, I was looking at my portfolios, one of the positions that I'm thinking about trimming. Not because it's necessarily Verizon is a bad company or anything. It's just that, this is a company that's relatively stagnant. It's basically traded sideways all of 2020. I'd rather just invest my money into something that at least has the potential to grow. Dividend yield is great though, so there's a little bit of a trade-off there. I mean, at the end of the day, we know that Verizon is a safe company, but it might just be better to allocate that money elsewhere. Then we got MasterCard in November of 2020, received $2.40 from them. MasterCard has recently just hiked their dividend as well. AbbVie, another company that increased their dividend this year to $7.26 for this particular quarter. Then we got Apple. Wow, Apple has just been all over the news with their new EV car potentially. I just made a video about that, so be sure to check that out. Then we got Costco. I made sure to buy Costco after their special dividend of $10. That way I got my starting cost basis at a little bit lower price than what Costco was trading at. So 70 cents there. If I had bought it prior to their ex-dividend date for that special dividend, it would have been a lot more than 70 cents, that's for sure. Then we got reality income. Just kidding, it's realty income at $3.28. So I need to enable my Fidelity to be auto dripping O dividends, because every month then I'm basically getting a pay increase if I do that. So I need to go back and change that, because I had it set up that way on Robinhood, but when I got transferred to Fidelity, I'll have to go back and rechange that myself. Then we got Procter & Gamble, very super safe stock here at $2.37 in dividends. SPHD, I was about to say high volatility, low dividend, but it's low volatility, high dividend is apparently the name that it goes by. So 92 cents there, monthly payer. Starbucks at $5.85. We got the oil tanker stock here in DHT. Huge dividends for a stock that only trades less than $10. So $5 in dividends from them. Still down overall in terms of unrealized losses, but I'm just going to be holding from the long run. If they continue to pay out this gigantic dividend, I'm just certainly going to hold them. Let's see how long they can sustain it. And then to cap it off here, we have QILD. This is another monthly paying ETF, covered calls, giving us $13.82 for the month. So in November of 2020, I had 13 different companies / ETFs pay me for a grand total of $61.98. And that's compared to just $19 that I made in November of 2019. So that represents a 226% increase year over year. I mean, hey, if I got a 226% increase at work year over year, I would probably run around naked and then probably not have a job anymore. So that's that's incredible growth to see. But remember, small numbers being increased, that does typically represent a huge percent increase. So main goal here is to be able to somehow be able to sustain that, which eventually it will level off here. In these beginning years, it's gonna look like huge increases, but eventually it will level off. But it's still nice to see it in a positive direction. All right, so moving on into December here, we had Intel pay me $4.29, and the amount of options income I've made on Intel is way more than this. It's like basically getting paid a dividend from Intel every single week the way that I've been doing it. And then we got Pfizer here at $4.94. We got Visa at $3.20, a company that's been impacted heavily by the C-19 this year. People not going on vacations as much, so less actual volume and transactions being done. But Visa, I have no doubt, will continue to prosper in 2021, hopefully when people continue to go outside more and these restrictions are lifted. Then we got Honeywell. So if anyone ever tells you can't make money off of dividend stocks, just look at Honeywell's chart, and they've had an amazing 2020 in terms of both capital appreciation and dividend income here at $5.58. One of my bigger winners here in 2020. We got the utility company Southern at $7.04. J&J, just bought a few more shares of them, so next time buy, it should reach the $10 mark here in J&J, so really excited to see that happen. Very safe company there. We got Equinix here at $5.32, great data center REIT. And then the Applied Materials, one of my bigger winners here in 2020 as well, $4.62. And then we got ExxonMobil, $6.09. So nice to see the dividends coming in, even if this has been a rough year for oil stocks, energy stocks, all across the board. And the outlook doesn't look great for them in 2021 and beyond, but I'm just going to continue to hold them and hope that sentiment changes. We got Microsoft at $6.16, another juggernaut here that has no signs of slowing down. We have Otter Tails, 37 cents. Okay, then we have Costco here. So this is the Costco special dividend. So I already owned one share prior to them announcing their special dividend, and then after their ex-dividend date for their special dividend, I bought another share. So I own 2 shares of Costco now. One of them paid me the special dividend and then the regular dividend, and then the next time Costco pays dividends, I'll get it for my 2 shares. All right, then we got 3M here. So it's always nice to see companies now paying me in the double digits. Hopefully, by the end of 2021, all these companies will be in the double digits. But for now, 3M, $11.76. Coca-Cola, close to getting to that $10 mark as well, $7.38. Then we got McDonald's, a prime real estate company, also fast food, at $7.74. and then O again at $3.28. So if I had reinvested it in November, this number would have been slightly higher. Then we have UNH here at $6.25, just another phenomenal year for UNH. And then we got Shell here at $4.66. Shell, another oil company, rough year for them. Duke, $13.51. Another strong, safe utility company here. And then Prudential at $12.10. This is a stock that I was able to get some ridiculous starting dividend yields at around 10% starting yield that I got it when it dropped immediately after C19. I swooped in and bought a few shares. Still trading at a very generous dividend yield. And then Waste Management at $4.36. I think Waste Management is about as safe as you can get, really. Then Bank of America, $6.12. So nice to see that there seems to be some loosening of the restrictions on banks in terms of share buybacks and dividend increases. So we'll see if Bank of America does choose to do either of those options. We got FedEx here at 65 cents. Probably the last time we'll see this one. I'm thinking of selling this right as we start the new year. And we got Nvidia at 96 cents. And then this is a placeholder here, QILD. QILD usually pays out its dividend towards the end of the month, but I have not seen anything come through. So for now, I'm just going to use a placeholder of $13.82, which is what was paid out in November. And I'm just going to put that there so my December number of dividends isn't understated. Once QILD actually pays out its real dividend, I'll go back and adjust this. But for now, we're going with 155.25, which is just crazy, because I remember in last year's video, I was going bananas after receiving just $55 in dividends for December. So that represents a 177% year-over-year increase. Now, if I could get this to 250 by the end of 2021, that would be a really big goal for me, because that would represent about a quarter of the rent that I pay, and I can just pay that basically all in dividends now. So it's just amazing to see that growth. Now let's get into the actual progression of the dividends by year table, the chart that you really want to see. And basically what this is this is a list of all the companies that I've owned at one point or another, and it's filtered by the least amount of cumulative dividends. So we'll work our way with the least amount of dividends, and then eventually we'll get to the big hitters, the big dividend payers that have paid me in my investing career so far. This is also useful to look at because it could also potentially show companies that may have suspended or cut their dividend, stocks that I may have sold out of, or ones that I've really increased my position in. So keep an eye on that as we go through these stocks. So starting off here, we have QQQ. This is a great exposure to the NASDAQ ETF here. And right now, I bought this towards the end of 2020. I've been loading up on shares of this, actually. I think I've just crossed the 6 or 7 share threshold for QQQ. So these dividends are definitely going to get bigger in 21. I've already highlighted this as one of the main ETFs that I'm going to be buying in 21. So without a doubt, this will be much bigger than 53 cents in 2021. Nvidia, while they don't necessarily have the biggest dividends, their capital appreciation has been off the charts here. Ford, one of the first companies I bought back then, you know, they had like a 7-8% dividend yield. So I was like, oh, what can go wrong with Ford when I first bought them in 2018? And then I've actually sold out of them now. Now they don't even pay a dividend. Won't see this on the list for 21, that's for sure. Otter Tail's first stock I ever bought, so you can see I own just one share, so you can see the penny increases every year that we have for Otter Tails. And then when we get to Disney, so $1.76 in 2019 compared to $2.64 in 2020. I guess this doesn't exactly show you that they suspended their dividend because I bought more shares of them, but in 21, let's see if they resume that dividend. I hope so. They've had some great capital appreciation, nevertheless, in 2020. CSX, a railroad stock that as soon as I sold it, the stock decided to go up after trading sideways for basically as long as I've ever held it. So no longer own CSX, but they did pay me $4.50 in dividends throughout the time that I owned them. FedEx, another company here, $5.85 in dividends from them. Then we have one share of Iron Mountain, which has progressively been paying me dividends, and probably will sell out of this just to consolidate some positions. Chubb, another one. A lot of these smaller companies I'm thinking of just selling out of and basically using that capital to add on to some of my bigger positions and try to get those closer to 100 shares so I can do options on them. Then MasterCard. MasterCard is actually one of the bigger positions in my portfolio, but doesn't pay out the largest in terms of dividends. So $9.98 cumulative for them, and that will continue to grow as I will continue to hold them for the long term. So we got Costco and Medtronic. So both of these are companies that I bought in 2020 for the first time. So this is a little bit misleading because this includes the $10 dividend, special dividend that Costco paid. So it should really be closer to like $1.40, but in terms of its special dividend, it adds up to how much Medtronic paid me in $11.40. So glad to see both of these blue chip companies I'm going to continue to hold them for the long run here. Then we have the ETF BST, BlackRock Science Technology. I made a huge mistake in selling out of this ETF. If you guys I want to highlight some of the bigger mistakes that I made, and that was selling out of BST at the beginning of the year. This is basically a monthly paying ETF. They've had huge capital appreciation, and they also pay out a ridiculous dividend yield. It was not a smart choice by me to sell out of them, but I thought I would be transparent and show that, yes, I do definitely make mistakes sometimes. Probably would have been better just holding on to them. All right, so we got Visa continuing to increase their dividend year after year. Also, the amount of shares that I own has also increased. So good example here of that. General Mills, pretty stagnant in terms of both the amount of shares that I own as well as the dividends paid. But nice to see them increasing as well. Honeywell, one of the best ads of 2020, $15.51 in my first year of owning them. We got Applied Materials, great company, has seen huge capital appreciation in 2020, and they pay out a very measly dividend, but the amount of shares that I've owned has continued to increase, and I'm only going to be adding more in 21. Waste Management, very safe stock here, $15.26 in dividends. It's really what I'm looking for when I own a stock like Waste Management, is just that security that it provides. SPHD continues to pay me monthly dividends. Should probably just set this up to auto reinvest in itself. Intel, $18.62 cumulative. Verizon, potentially the last time you might see them here at $19.03 grand total. You got Union Pacific, $20.10 from these guys. So you can see that I didn't own them in my initial year, but then started buying them in 2019 and 2020 and continue to buy them throughout the years here. So Bank of America, I really upped my amount of shares owned. Back in April, I bought about 25 shares of Bank of America. Seems to have been a great investment, have returned great dividends and capital appreciation. Coca-Cola, another company that I really bought more of in 2020. You can see the pretty big increases here. Starbucks continuing that trend here. You can see the progression when I first started investing to my sophomore year to now my junior year of investing, $22.52. NRZ, so this is actually an interesting one because these first 2 years, they were paying out their full dividend amount. In 2020, they actually reduced the amount of dividend that they paid. It went from 50 cents to 5 cents a share, and then it went to 10 cents a share, which I believe is what it's paying out now. So I never sold my shares, so I'm still making money off of NRZ, even though they've been hit really hard here. But the share price is recovering, and it's almost getting back to what it was pre-C19, and then hopefully the dividend yield will continue to increase. And just for those reasons, I'm going to continue to hold it. Procter & Gamble, haven't really increased the amount of shares that I've owned, so it went from $5.02 to $9.37 by the end of 2020. And then we got DHT, first time owning this stock in 2020, $25.75. And then looking at this, you can see there's a huge red flag here in Boeing. Went from $6.84 in 2018 once they were a prime example, a model company. Boeing in 2019 continued to pay out great dividends. Share price was still pretty strong, but that's when the whole 737 MAX fiascos and tragedies happened. So then we got Southern utility company. This is exactly what I want to see in these guys, just continuing to raise that dividend. I understand the capital appreciation isn't there, but I'm just really looking for that dividend safety. And then we got Prudential at $28.71, bargain buy here in 2020. Shell, $23.58. So this doesn't do a very good job of explaining that Shell actually cut their dividend by 2/3 in 2020. But since I increased the overall amount of shares that I owned, it makes it look like they had a great year and just continue to increase their dividends. That was far from the case. Store, a REIT that's been gaining more and more traction here in the YouTube community. You can see here, I first owned it in 2018, and ever since then, I picked this stock up at some huge bargain prices in the spring. trading for around like $14 a share. I got a crazy starting yield. Let's hope that it can continue to give us that payout going forward here, as more and more stores will hopefully open up after the holidays, after these lockdowns are eased up. Alright, so J&J, exactly what you would expect in a blue chip company, continue to increase here, and then since I bought more shares in December, this will only increase in 2021. Johnson & Johnson, of course, has a better credit rating than the United States government, which is totally insane to even think about. Then we got McDonald's, $4.91 in 2019 to $25 in 2020. Equinix, only own 2 shares of this company, but they pay me $31.12 in dividends. Each of these shares is around like $700, so it's a little bit understandable. ExxonMobil continuing to pay out that dividend. Still keeps its dividend aristocrat streak alive in 2020. Will be interesting to see if they can keep that up in 2021. So that's one to watch here. Then we got Realty Income at $33.13. And then this will only increase in 21 as they raise their dividend like a fraction of a penny every month. And then I'm going to be doing a drip. So basically can lock that one in to increase in 21. And then UNH, $33.16. Medical Properties Trust, another REIT, at $35.19. This is one that still is trading not at C19 level. So I've been thinking about buying more shares of them. They got Microsoft, brilliant company here, actually raised their dividend again this year. So $35.23, just a cash flow machine, golden goose, if you will. And Pfizer, which has actually announced that they were going to be basically their spin-off company that's going to be absorbing some of their dividend yield. So this number will actually go down most likely in 21. So keep a close eye on that, see if it's worth owning anymore. Probably will, just to keep it. And then we got Duke, $35.61. This was the first year that I held on to Duke. Pepsi, another great year with Pepsi, $35.89. We got AT&T, $22.36. The company has a lot of debt. Let's hope they can keep paying out this dividend, but cash cow machine. And then we got JP Morgan Chase, same thing with Bank of America now that the Feds might be loosening some of these restrictions on share buybacks and dividend increases. See a lot of people actually in the community buying JP Morgan Chase, but now that it's at the 120 level, where were you guys when Chase was trading at $90 for so long? Basically all of 2020 it was trading sideways, but after it had its rally up, that's when more and more YouTubers decided to buy it. Pretty interesting strategy there, but I think they're all going to be rewarded as Chase will probably continue to go up. And then Apple, $43.25. They have so much cash on their balance sheet. No doubt that they will continue to raise that dividend. AbbVie, $46.12. I'm so shocked when I see the aggressiveness and the increases that AbbVie has been doing with their dividends. It went from $13 in 2019 to $27.41 in 2020. Did add a few more shares, but not that much. So going to continue to add shares if they keep raising the dividend that much. And then 3M here, this is the actual company that has paid me the most in dividends at $63.77. So that makes up for their measly share price returns, but in terms of dividends, they've paid me quite a lot here. Hope to get this number to $100 by the end of 2021. And then we got QILD, the ETF that I first started buying in the later half of 2020, has already paid me $80.33 in dividends, monthly payer. And I'm just going to continue to buy that one and have it auto drip into itself, which is going to count for even more dividends in 21. So what's the grand total here, guys? The grand total is $852.46 in 2020. You can see the year-over-year change from 2018 to 2019, that was a 209% increase. And then from 2019 to 2020, that was a 220% increase. So this really does help me get close to beating that benchmark comparison that I keep holding myself to, which is getting paid more in dividends than I am getting paid to go to the bathroom at work. I think 2021 will be the year where I finally pass that threshold. So just a quick reminder, guys, don't compare yourself to me. Don't compare yourself to others. Really what you should be focusing on is how you can be financially free, how you can be better than you were yesterday. You notice here I'm not pumping up any stock to get rich quick and 10x your money. I think real wealth is truly built slowly over time, just like I'm demonstrating here with these companies. There's no skipping the line. I mean, if you think about it, if there was an easy way to get rich, everyone would just be doing it. So keep your emotions in check in 2021. I would say if I could average around $200 a month in dividends next year, that would be my end goal. Right now, in the last quarter of Q4 of 20, I was averaging $84 a month. My goal that I set in 2019 was by the end of the year to have at least $75 a month average. So I barely squeaked by and was able to achieve that goal. So let's try to aim a little higher in 2021. And we can see here on some of the charts that I made the progression of how each month just continues to build upon the next one. So that base never really gets any lower, but the ceiling is exponential and there's no limit really to how much I can make. I have also here is basically, if I wanted to get even more detailed, you can basically see the dividends if I broke it out by a year and if I broke it out by hours. So in 2018, I would have made about a quarter every single day in dividends, and then by the hour, I would have made a whole penny. So in 2019, that I got a pay increase, and that went to a little under 3/4 per day, and then about 3 cents per an hour. And then in 2020, I'm now making $2.34 every single day from dividends, and then I'm making a whole 10 cents per an hour. I mean, that's still pretty great because, you know, I think about when I was a teenager and I used to work like fast food, I would calculate how much I would make per minute. It would be like 10 cents per minute. So to be able to now earn 10 cents per an hour without doing any work, that really just does show the power of dividends, the dividend snowball that is continuing to accumulate here. So everyone, I would love to hear your dividend goals in the comments below. It's been a fun year of making videos, of being paid money, and thank you again for all the support. I got huge plans for the channel in 21, so please like this video if you've enjoyed it. It really does help me out in the algorithm and encourages me to make more videos. And let's make 2021 a great year, and let's get those gains even bigger than they were in 2020.